The first thing consumers will see is if they have a credit card. Most credit card rates are pegged to the prime rate, and the prime rate is pegged to the rate that the Fed changed just recently. It'll be a very small increase going into effect most cases in February, so there'll be a slight lag. It'll make a very little difference in the payment, maybe $1 a month or something like that, depending on your balance. It will be minimal, maybe even less than $1. The interest rate on home equity loans is also pegged to the prime rate and adjusts with that. It depends on the terms that they have with their lenders, but there may be an increase in a small increase in their monthly payment. The other thing, there could be some adjustable rate mortgages affected depending on when your adjustment period comes up. If it's coming up in the near future, you might see some impact, but again, it's going to be minimal. This was a very small increase. Well, this recent rate increase by the Fed was so small, we're talking 0.25%, that in my opinion will have no impact in the near term on auto loan, car loan rates, or on mortgage rates. Car loan payments are more impacted by how much you pay for the car and the term of the loan, whether it's a 4-year or a 5-year or a 6-year, has a much greater impact on payment. Mortgage rates, they're based on long-term rates, based on long-term expectations of the economy, and they haven't changed as a result of what the Fed has done. They tend to look more long-term. As a result, there was no change, as I expected, no change in mortgage rates, and they continue to show no effect. They're staying right around where they are, which is where I expect them to be for the better part of 2016. I see one, possibly two more small rate increases in 2016. One in the first half of the year and one towards the end of 2016. The Fed's projections, based on the results of the recent meeting, show they expect to raise rates 4 times in very small increments next year. I believe that's overly optimistic. The Fed has been optimistic over the last several years as far as the timing and the extent of any interest rate increases. I just don't feel that the global economy and even the U.S. economy is strong enough to warrant 4 increases next year, but I do see possibly 2 rate increases during 2016.